Rick, how do you take the order from Twitter today?
Just another day in paradise of late. I mean, honest to God, what is going on here? We are, our membership just, frankly, doesn't know what's coming next. And it's no way to run a business. It's just like another one-way ticket on the Titanic. And I really dislike being called great American companies, like calling the farmers patriotic. You know, next thing we'll be in line for our bailout. They're getting $28 billion. We're going to need one too. This is not funny. This is no way to run a business. This is just lousy way to do things. And it's needless to say that we're getting an earful from our members. You know, we are, less than a week away from supposed 10% tariff. And, you know, that hits 91% of apparel. 91% of apparel, 52%
Even
of
with
footwear.
the ones that are delayed?
Even with the ones that are delayed on September 1st, 91% of all apparel coming into the country is going to get hit with a tariff. And now
91% of what's coming from China.
What's coming from China.
Which is how much percent of total?
Which is 41% of total. And it's frightening. We know we're going to get hit. You had retail earnings all week, and you noticed they were all over the board. That's not a surprise. China retaliating today was not a surprise. And yet telling us to get out of China, in fact, giving us tariffs is already telling us to get out of China. But now telling us to tell us to get out of China is one of the most ludicrous things that we've ever heard. You know, the Grinch has stolen Christmas from us. We don't know what else there is to steal. And frankly, why would you leave China if you're trying to get your intellectual property protected and your transfer of technology protected and to gain market access into China, and you're telling us to leave at the same time? This whole argument makes no sense.
You mentioned that we did hear from a lot of retailers with their results this week. They were all asked about how they could contend with tariffs being imposed, a new round of tariffs being imposed. And the message seemed to be, we're working on it. We can navigate around it. We can negotiate perhaps discounts. We can try and get pricing where we can. In other words, the message seemed to be it was not necessarily going to be a vast markup on goods for consumers.
You know something? We're a pretty smart group. We're savvy retailers. We're savvy manufacturers. We're savvy brands. We know how to work around these things. But too much is coming too fast. We have goods on the water. The September 1 thing clicks in when it clicks across the border. So we're hit. Somebody's got to pay. But the part you don't see, like a lot of our members have to take loans. They have to borrow money to pay for the tariffs. Their working capital is shrinking. And if you look at the retail environment, just track it for the last 3 years. 2017, we had more bankruptcies than 2008. 2018, we lost over 100 million square foot of retail. 2019, the first 4 months of this year, announced more door closings than all of last year. Retail is struggling to get by. We thought we were getting on our feet, and we just keep getting hammered.
But that has nothing to do with tariffs, does it?
It has something to do with tariffs, not everything to do with tariffs. We have a changing consumer. We have a changing retail environment. Companies like Target, who know how to adjust to it, are doing just fine. Others are struggling. But add tariff on top of that, big problem.
Yeah, doesn't help, for sure.
Another day in paradise.
All right, Rick, we appreciate you coming in.